everyone, and welcome to How to Double Your Retirement Account Through Real Estate Investing by Overland Capital. My name is Michael Holman, and I'll be your host today. We also have Ken Holman with us, and we'll introduce him shortly. We also have Alabama playing our background music. Unfortunately, it is a recording as much as we'd love to have them here in our office. So, Overland Capital is part of the Overland Group family, which is a fully integrated real estate organization. It's been around for over 30 years. The goal of Overland Capital is to provide investors with a better investing experience. And we believe a big part of that is helping individual investors, self-directed retirement account owners, and 1031 tax-deferred exchange sellers invest in commercial real estate. We've all heard the phrase, invest in what you know, and commercial real estate is absolutely no different. The more you know, the better investor you'll be. So feel free to ask questions throughout the presentation, and we'll do our very best to answer all of your questions at the end. For anyone who needs help locating that Q&A button, it's located at the bottom of your screen. Also, you'll be emailed a copy of this presentation, but you can also view it on our website at overlandcapitalcorp.com and by clicking on the Education tab. A little bit about me. I run the investments and finance divisions of Overland Group. I spend a significant amount of my time working with equity partners and lenders. I'm also a licensed CPA. As I mentioned earlier, we have Ken Holman with us today. Ken is the president of Overland Group and has over 40 years of experience. He has developed over $350 million worth of commercial real estate. He also holds just about every top designation you can get in the real estate world. Let me turn it over to Ken to talk a little bit about himself.
Thanks, Mike. Hey, I'm excited to be here with you today, and hopefully Mike and I can impart some lessons that we've learned about investing in real estate and how to double your money. So let's get started. Well, since we're focusing on doubling your retirement account by investing in real estate, I should say that we're not just focused on doubling your retirement account, because you could do that if you got 6,000 in there and you put another deposit in to double it to 12. But we're talking about how you can actually take an account of, say, 100,000 and double it, help it grow to 200,000. We work with a lot of clients that have $500 to $1 million. So our goal is to figure out ways to help you double your money and do it through real estate investing. So the first step to doubling your retirement account, and I'm being a little facetious here, but you actually have to have a retirement account. I can't tell you how many people that I've run across that haven't even got a retirement account. And that seems pretty odd to me. So you have to have one at the very beginning before you can do anything. So many plan owners start out by working with people that they don't have much knowledge about what's going on, or they'll work with a company. They don't know where their money's invested, and they don't know whether they're in mutual funds or other stocks or ETFs or just exactly what they're doing. So I can tell you there's a lot of mismanaged retirement accounts out there on the planet. So would you permit your stockbroker or your financial planner to be a cosigner on your personal checking account? I think the answer to that question for most people would be an absolute no. And yet, many people just want to turn over their most important asset they have to someone who charges, in many cases, pretty exorbitant fees, has no accountability and no real vested interest in whether or not your account succeeds or fails. And they just let them run with it. And I just think that is a crazy way to handle your retirement account. So there's a better way, but it requires you to get into what's called self-directed retirement accounts. Now, many may know exactly what that is, but there are others who don't. And we'd like to teach you a little bit about what self-directed retirement accounts is all about. And then we're going to get into how you can double your money. So self-directed retirement accounts are administered by a third-party administrator. They're often called a TPA, and a custodian. The custodian is the entity that basically keeps your money, like a bank. Some of the biggest names out there in self-directed retirement accounts are Equity Trust and the Entrust Group. We've used them extensively, but we've also found that a lot of the smaller TPAs that are out there just tend to be a little bit more user-friendly. So how do you invest in real estate? That's a question. You can invest directly in real estate if your plan is self-directed. And the IRS, many people don't realize this, but the IRS permits you to invest in all kinds of different investments, real estate included, being one of the most important among them. But they just don't realize all of the avenues that you can invest in, because the stockbrokers, the financial planners are all working with companies that deal only in publicly traded funds. And when you get into that, they usually begin to limit self-direction and what you can actually do. So you're permitted to invest directly in real estate if your plan's self-directed, and that means it's placed with a company that permits investment directly into real estate. So self-directed IRAs and 401ks are 1,000 times better, in my opinion, than retirement accounts managed by someone else. And that's for the following reasons. One, you control the investments you make. Two, you can maximize the returns you achieve. And three, you limit the fees that you're charged. And most people don't realize that these fees, 1% of the asset value taken every year, and then with mutual funds and other types of accounts where asset managers are taking fees, you almost have to earn double the amount of money in your investment to be able to get even a reasonable return of 5%. Most mutual fund accounts, they have found, average less than 4%. That was a big 20-year study that was done. So here are some of the types of permitted investments that you can do in a self-directed retirement account or a self-directed 401k account. On the real estate side, you can do commercial real estate, you can do construction loans, you can do fix and flip properties, you can do discounted mezzanine and bridge loans, you can do all types of real estate investing, residential real estate investing. You can do tax deeds and tax liens. I don't do much in that, but we've seen several people that have done really well with those and made a lot of money with those. On the stock side, annuities, certain annuities, bonds, publicly traded stocks, REITs, both public and private, T-bills. There's all sorts of things you can do. With a self-directed retirement account, you can do everything you can do with any financial planner or stockbroker on the publicly traded side, and you can do real estate on the non-publicly traded side. And one thing that I haven't mentioned in here, which I tend to do a lot of with my retirement accounts, is hard money loans. And I don't do the true hard money loans, which are 18 to 24%. I'm more into the 12% and 2 points, and and I can lend money out all day long at 12% and 2 points on secured real estate investments. And that will net me about a 15% per year return, which is a lot better than most of the accounts that you see.
Okay, so now let's get into how we actually are going to double this retirement account. We now have it set up. We know it has to be self-directed. Well, one of the first things to note about a self-directed 401k or IRA account is all the investments in real estate must be unleveraged unless the loan is non-recourse to the account owner. So non-recourse simply means that the loan is secured by collateral, the real estate in this case. Really, in other words, neither the owner or the retirement account can personally guarantee a loan. So if the borrower defaults, then the lender can take the collateral but cannot come after the borrower personally for repayment. So essentially, that means that if you wanted apartments in your portfolio, let's say you wanted a 200-unit apartment project, that would probably cost about $30 million. So what we're saying here is that you want to go buy that 200-unit apartment project, you better have $30 million in your retirement account. Whew, that is a nice little nest egg, and you're going to dump that all into one project. Seems pretty ridiculous, huh?
Hey, Mitt Romney had that much in his.
Yeah, yeah. Well,
but
we're
most
not
of
even
us don't.
gonna go anywhere near that. That's a hot topic. So,
Yeah.
but really moving on. The next slide. So this slide is really the crescendo of this entire webinar. So if you fell asleep during the retirement plan section, I'm telling you right now, wake up. So the secret to double your retirement account the fastest is by leveraging your investment. Well, I know at least half of you that are watching this right now are thinking, Mike, you imbecile. You just told me on the last slide that you aren't allowed to leverage your real estate investments in your retirement account. Wrong. I said the loan has to be non-recourse to you. Pay attention because we're going to give you our secret for how we've done this hundreds of times. But first, let's go through some examples so that you understand why we're harping on this leverage and why it's so important. If you had an unleveraged investment of $100,000 earning 5% interest per year, your investment would double in roughly 14.2 years. So if you're 20 and you're watching this webinar, you're probably thinking something like, sweet, double my investment by the time I'm 34, sounds pretty good to me. If you're 60 and you're watching this, you're probably thinking something like 14.2 years. Are you kidding me? It can't take that long. I'm just hoping to be around in 14 years,
You're
let alone
getting
being
into my territory, Mike.
I know, let alone wondering about doubling your retirement account. So let's add leverage to this example and see what happens. If you had a leveraged real estate investment of $400,000 appreciating at 3% per year, and you paid $100,000 down and borrowed $300,000 at 5% interest, amortizing that loan over 25 years. So just to recap, $100,000 is all that you put in. $300,000 you borrowed. That's the leverage. So that means in 5.3 years, your equity would have grown to just over $200,000. Now, to be clear, that is assuming that the property breaks perfectly even from operating costs. So, and that being said, if you have a property that can't break even, then you have much bigger issues than doubling your money. But for our purposes here, we're going to assume that we just break even. The project itself doesn't make any money. It's simply appreciating. We leveraged it. But so if we were getting money, this time frame would even be shorter. And for all you math whizzes out there, 5.3 years is a lot less amount of time than 14.2 years in order
Mike,
to double.
Another thing with leverage and taking $100,000 cash and borrowing $300,000 to buy a $400,000 investment, that's pretty impossible to do if you're in the stock market. That I tried to go to my bank one time and had some money, and I said, I've got all these great stocks. I want to borrow against these stocks so that I can buy more real estate. And they basically, by the time I got through, they were only willing to lend me 50% of the value. I couldn't trade the stocks. The interest that they wanted to charge me was more than the going rate of interest. By the time I got done, it was a disaster. There was no way I was going to get any money to do that. So it's a lot easier with real estate because every bank out there, every credit union out there is loaning money on real estate. They consider it a safe investment, and especially today with the volatility going on in the stock market, real estate is a lot less volatile.
Yeah, exactly. So most returns in real estate are shown as an IRR, or internal rate of return. So if you had an IRR of 20% on a real estate investment, you would double your money in 5 years. If you had an IRR of 17%, you would double your money in 5.9 years. Even if you had only a 12% IRR, you would double your money in 8.3 years. To put that into perspective, obviously we do a lot of real estate investing. 12% is about the lowest we ever go on investment. I mean, that's our single tenant, nationally accredited groups that are coming in. I mean, it's your Family Dollars and your Dollar Trees and your Chick-fil-A's, right?
Yeah.
That's the only ones that are coming in really that low. And most of the time, we don't even do a deal if it's not at least 15% IRR. So really, even if you're investing in some of the least risky investments in real estate, you're still doubling your money much quicker than with an unleveraged investment. Okay, so I promised about 5 minutes ago to give you the secret to how this all works with a retirement account. So if you have a retirement account, you need to invest your money with someone who borrows the money and guarantees the loan instead of you. That means that the loan is recourse to that borrower, so the lender is satisfied, but your investment receives the benefit of leverage without any recourse to you or your retirement account. I mean, it's like magic. Everyone across the board is satisfied, and everybody gets what they want. And you get the opportunity to potentially double your money, honestly, 2 or 3 times before that sorry sap who decided to grind it out with their 5% interest.
You know, Mike, the other thing here too is sometimes when you're getting into apartment investments and they're bigger projects, a lot of times you can find lenders out there that will do non-recourse financing for a syndication that is a bigger deal.
Yeah,
So
agreed. But the beautiful thing about having a investing in that self-directed retirement account is it doesn't matter. I mean, ultimately to you, no matter what, it's going to be non-recourse. Whether it's recourse to the investment firm that you invest with or not, to you it's non-recourse. So that's a fantastic advantage.
yeah, that's true too.
I mean, it's like saying, honestly, it's like saying giving somebody $100 and they say, okay, I'm going to go borrow $400. We're going to go do this investment. Oh, and by the way, if everything falls apart and that $400 is due, you don't have you don't get any of the downside, but you get the upside if it works out. I mean,
Right.
it's fantastic.
It's true. So some things you have to do when you've got a self-directed retirement account. You have to follow certain rules. And these rules apply to everybody, including financial planners and stockbrokers and bankers and others who don't permit you to invest in real estate. But 90% of the time you never hear about this because they've limited your ability to invest in any of these higher earning assets. So they never tell you about any of this. But here we go on a few rules. 1, no prohibited investments. 2, no prohibited transactions, no self-dealing, and only permitted investments. So let me state what that means. A prohibited investment is when you invest in something like antiques or art or rare coins or jewelry or anything else that's not permitted by the IRS. Real estate happens to be an asset class that is always permitted by the IRS. Prohibited transactions involve doing business transactions with somebody who the IRS doesn't permit you to do business with, like you can't loan money from your retirement account to your stockbroker or financial planner because they've got a fiduciary responsibility, for instance. You can't sell an investment to or buy an investment from somebody who is disqualified to your plan, and that's what's called a prohibited transaction. Self-dealing means buying or selling an asset to yourself or to a close relative like your parents, your grandparents, your children or grandchildren or their spouses. Surprisingly, it just follows this familial line of ascendancy and descendancy, but it doesn't include uncles and aunts or other types of relatives, cousins you could invest with. But surprisingly, you can joint venture a real estate deal with any of these people who would otherwise be considered not permitted. For instance, you can invest with parents or family, or you can even individually invest with your retirement account, even if, as long as you invest at the same time in the same deal. And so it's a pretty unique situation, but you have to make sure you're following the rules. Only permitted investments are appropriate when you're doing retirement accounts. The IRS doesn't want you to play games. They don't want you to do something that's illegal or not permitted. Real estate, however, is the biggest single alternative investment available out there that isn't in the stock market. And we all know what the stock market's going through these days. I didn't check this morning because I was on a plane, but I wonder if the stock market lost several hundred points today. So a quick recap. We hope this has been helpful. The key takeaways are these. Retirement accounts are a good thing to invest in, and they can be invested in real estate if your account is self-directed. You can double your retirement account 2 or 3 times faster by investing in leveraged real estate, which has to be non-recourse to you and to your retirement accounts. And an after-tax Roth contribution, in my opinion, and we haven't talked much about Roth contributions, but a Roth is you're making your contributions after you pay the tax, not before you pay the tax. In my opinion, that always trumps a traditional contribution, or because you avoid the payment of any taxes. And when you get 72, which is now when you have to start taking out what's called required minimum distributions, if you eventually get your money in a Roth IRA that's self-directed, you do not have to pay any required minimum distributions. So just do this. Make sure you follow the rules, get a self-directed retirement account, invest with someone who's willing to take the responsibility of guaranteeing the loan so it can be non-recourse to you, and just make sure you're working with an expert. We hope this has been helpful. We're excited about working with you and excited to explain these ideas to you. We hope you found some little nuggets in there that will work for you. The goal here is just keep growing those assets in a tax-free or tax-deferred situation. So please make sure you take the poll that pops up on your screen. That'll help us get to know you a little bit better. And we're going to go ahead and see if there's any questions out there that we can respond to. So let's get started with that.
All right. So, question time. This is honestly probably the most valuable time we have with everyone. And we usually always get a lot of good questions. So, first question comes from Mohammed. How about Canada? Will this apply in Canada?
Mohammed, we love to have Canadian people join us. And the answer is you have to follow a whole different set of rules that apply to Canada than the United States. So I'm sorry, this relates to IRAs and 401ks that are available in the United States. I'm sure Canada has some of the same rules that apply, but obviously we'd love to have Canadian investors. And uh, if your retirement accounts up there qualify for investments in uh, other nations, that would be just fine.
So, to sum up, it's a big we don't know for sure, but I would love to find out. So that's really good question, Mohammed. I apologize. We don't have a direct answer. Okay. So next question from Travis. So is Overland the company who would take on the non-recourse loan that we would leverage money with? I'll go ahead and answer this
Sure.
one. So, Travis, the answer is yes. I just want to make sure that we clarify here. So, I mean, we do a lot of investments. I'll just use this as an example because we're doing it all the time, right? Like we have a 116 unit apartment complex that's under construction, and when we were raising money for that, we had investors with self-directed IRAs and 401ks invest in that. So the when you go out and get it was a $19 million loan. When you go
I
out and
think
get
we
that,
raised what, 5 million on that, Mike?
yeah, it was 6 million.
6 million?
Yeah. So when we go out and get that loan, that 19 million, the lender requires it to be recourse, not non-recourse, recourse. So that which means somebody has to personally guarantee that loan. And yeah, in that situation, absolutely. So Overland, our company Overland Development, who is the developer on the project, they personally guaranteed the loan uh, for that $19 million, and none of the investors had to guarantee the loan at all. So yeah, absolutely.
But it was a pretty safe investment. We put up almost 30% of the money in equity capital. So uh, still a still a great investment, but yes. And then it turned out to be non-recourse to anybody that had an IRA or 401k that was self-directed that came into the deal.
Yeah, exactly. So yeah, there's no recourse or no. I mean, to be honest, there's just no downside as far as the loan goes. So that's one of the big things we do.
Another point with these, some investments are 506B investments, and some are 506C. Those are terms relating to the SEC on which is the Securities and Exchange Commission. But if the project is a 506C, which requires all the investors to be accredited, if you're going to invest your 401k or IRA money in that project, you as an individual have to qualify as an accredited investor. If you're doing a 506B project, which permits both accredited and non-accredited investors to come in and invest, then if the if you're one of those non-accredited investors, you don't need to qualify to be accredited. And accredited means that you have $1 million in net worth, excluding your primary residence, or you're making 200,000 a year annually, and have done for a couple of years. So.
Okay, thanks for that. Thanks for that clarification. So, right now, those are the only two questions we have. So we'll go ahead. We're gonna make sure and give maybe 20 or 30 more seconds here to see if anybody has any questions there in the middle of typing. If not, oh, we just got one. So, Kim, if I sell my 18-plex apartment with a 1031 exchange, I need a new loan bigger than my 1.2 million.
Sure, I
Kim,
could take that,
yes.
unless you want to take it, Mike.
No, you're more than welcome to take it.
Okay, when you're doing 1031 tax deferred exchanges, which, by the way, Kim, you're asking a question that doesn't apply to this
I know. He's
self-directed
that
retirement account stuff, but
Kim, you're sneaky. You
yeah,
just slide that one on in there, huh? Hey, I
we
will
still know
say
the answer to that.
we do, but I will say we do have a whole webinar on 1031 exchanges. It gives you all the information you could want. So I'm gonna let Ken answer this
Sure.
question, but if you want more detailed information, go to overlandcapitalcorp.com, go to that education tab. You can find that entire webinar we did all on 1031s. By the end of it, you'll be so sick of hearing about 1031s and the IRS, but you will be infinitely more knowledgeable. Sorry, Ken, go ahead and answer.
So if you've got an 18-plex and you're doing a 1031 tax deferred exchange, it has to be a like kind exchange, and it also has to be whatever the equity is and whatever the debt is. If you're bringing debt and carrying that over to the new deal, those both have to be equal to or greater than the amount that you're 1031ing on the relinquished property is what it's called.
Perfect, thank you. And Kim, you're welcome.
We do a lot of 1031
we do a lot
investing
of
with our
1031s.
projects. In fact, we're one of the few that I'm aware of that can take 1031 investors, that can take IRA and 401k and other type of retirement account, self-directed retirement account investors and individuals, and marry them all in the same project. Most people haven't figured out how to do that, but we've taken a lot of time to learn how to do it, and it's pretty neat for the investors. It gives them a lot of flexibility.
Perfect, thank you. Okay, so it looks like that is all the questions that we've received. We really appreciate everybody getting on today. Like I said earlier, we have a lot of good information on overlandcapitalcorp.com. We have a lot of past webinars, things that would be really helpful if you're trying to get into, whether you're a seasoned commercial real estate investor, or you're just brand new, you're trying to learn more. Get on there. You'll find a lot of good information. You'll start gaining more knowledge than you've ever wanted in commercial real estate investing. But the key is at the end of the day, you're going to be that much more equipped. You're going to have the knowledge and information that you need to make a good investment.
So the best way to get in touch with us, you can call the number on the screen, 801-355-1111, or if you want to call me personally, I'm happy to give you that number. It's 801-231-6650. And I've noticed one of the people that we're talking to that has made a few comments is talking about relationships with other people, and I certainly know who you're talking about, and those are great contacts we've got, and good investors that work with us. So thank you.
Have a good day, everyone.